Good morning, I'm Naomi Domingo. As we gear up for the U.S. trading day, the economic picture remains intricate, both domestically and globally. Let's break down the key signals shaping investor sentiment today, Thursday, April 10, 2025. Domestically, the U.S. economy continues to send mixed signals. The labor market, while perhaps showing some very early signs of cooling in wage growth, remains fundamentally strong by historical standards, with unemployment staying relatively low. This resilience is a positive sign, reflecting underlying demand and business activity. However, inflation remains the persistent concern. While we've seen some moderation from the peaks, recent data points, perhaps a slightly stickier than anticipated CPI or PCE reading in the last release cycle, remind us the path back to the Fed's 2% target isn't necessarily smooth. This keeps the Federal Reserve in a watchful stance. Markets largely anticipate they'll hold rates steady for now, but every incoming data point, especially on inflation and employment, is being intensely scrutinized for clues about the future path of monetary policy. From a microeconomic perspective, we're starting to hear early whispers ahead of the next earnings season. Corporate commentary will be crucial. Are companies maintaining margins despite cost pressures? Are they seeing any slowdown in consumer spending? These individual stories will aggregate into the broader macroeconomic narrative. While free markets are adept at adjusting, persistent inflation can erode purchasing power, a classic Keynesian concern regarding aggregate demand. Looking globally, the picture is varied. Overnight, Asian markets closed mixed. Tokyo's Nikkei saw some pressure, potentially influenced by currency fluctuations or profit-taking after recent gains. Meanwhile, markets in Shanghai and Hong Kong showed relative stability, perhaps buoyed by specific domestic policy expectations or sector performance, though underlying concerns about sustained growth momentum persist in China. In Europe, markets opened this morning and are currently trading cautiously, perhaps slightly lower. They're digesting their own regional economic data, maybe some industrial production figures or inflation updates from key Eurozone economies, alongside the signals from Asia and the anticipation for the U.S. Open. Growth in Europe remains somewhat sluggish compared to the U.S., facing its own set of challenges. So, what does this mean for Wall Street's open later this morning? U.S. stock index futures are currently pointing towards a slightly lower open. Dow futures, S&P 500 futures, and NASDAQ futures are all indicating a bit of pre-market pressure. This follows a somewhat subdued trend over the past couple of sessions, suggesting investors are grappling with that persistent inflation data and the implications for Fed policy duration. There isn't one single major catalyst driving this morning's futures movement, but rather an accumulation of factors. The mixed overseas leads, ongoing evaluation of inflation's trajectory, and perhaps some sector-specific news or early earnings pre-announcements. We don't have major U.S. economic data releases scheduled right before the bell today, but traders will be watching jobless claims figures as usual and keeping an eye on any unscheduled news or geopolitical developments. Bond yields will also be a key focus as they reflect inflation and interest rate expectations. Expect a potentially cautious start to trading. While the underlying U.S. economy shows resilience, the market's immediate focus remains locked on inflation and the Federal Reserve's response function. It's a delicate balance, and investors seem inclined towards a bit of risk-off sentiment as the trading day approaches.
Hi, I'm Stu Norcat, and thanks for watching Constructive News. Subscribe to get regular updates about the most important news stories, and we thank you for watching.